Testing, testing. 1, 2, 3, testing. Okay. Hi, everybody. This is David Skarica, and this is another in our series of special opportunities. And, in the last, I'm a mining guy to begin with, and really in the last year, we have focused more on gold and precious metals. So this is a deal we actually talked about earlier in the year, Sonoro Gold. It's very interesting because it's a little different than a lot of the other deals we do, which usually just are basic kind of exploration companies. This is actually a near production play. And the company over the last few months has progressed right on target, right on its timeline. They've had a bunch of encouraging drill results coming in. And right now they're in the midst of doing a private placement, which has actually already mostly been filled. There's still some space in it, but they're raising $2 million at 18 cents to again basically fill out what they need to do to go in production. And they just mentioned to me off the air, which I'll elaborate on here more, that they really, after this private placement, really don't need much more capital, which, and this industry is always an important thing. So I've got Ken and John here. And Ken, if you can elaborate maybe a little bit on what's happened since we last spoke, the drilling results, the et cetera, and then the plans, going forward for, raising these funds and then potentially putting this project in Sonoro into production.
Thanks, Dave. I'll be happy to do that. I think to recap, back in January, we chatted about the aim for the company is to be in production with an open pit heap leach facility by the first quarter of 2022. We're right on track for that. I think it's a little ambitious to say that we can be in production by the end of this year, but I'm very comfortable in stating the first quarter of 2022. Now, to get there, we have been drilling with 2 RC rigs, reverse circulation rigs, since last September. Well, since September, since we started drilling, we've had 2 rigs, and now we've got 2 RC rigs operating. And that is producing around 4,000 meters of drilling per month. So if you look at the first quarter of 2021, we drilled approximately 12 to 13,000 meters of RC drilling. Now, these assays will all be included in the next edition of the 43-101 technical report. And so to get to our destination of being in production by the first quarter of 2022, we've taken on several major accomplishments that are underway at this point in time. The first is metallurgical testing. We produced 5.5 tons of material and shipped it to McClellan Laboratories in Reno, Nevada for processing for the metallurgical testing in December of last year. And since that time, they've completed the bottle roll tests, which showed an average recovery rate of 80.3%, which we're very, very satisfied with. And they're in the process right now of producing the results from the column leach test. That'll be completed sometime in the month of May. And we expect to have our final report sometime in the latter part of June. That will enable us then to produce the work plan for going into production starting in 2022. The other issue that we've taken on is the 43-101 report, which is an update from the original report of 2019, which showed 200,000 ounces grading 0.5 grams. Now, this new report obviously will have very close to around 50,000 meters of total drilling that will be analyzed and will be part of the plan for going to production. And that should be completed at the same time as the metallurgical testing. And finally, The preliminary economic assessment, which is being done by Denham Engineering out of Toronto, is underway currently, and that will be the definitive document that we will use for raising the construction finance. And we estimate that'll be done at the same time as the metallurgical testing will be completed and the resource report will be updated. So that's a snapshot of where we're at today. We've done extremely well on the drilling side. We have been successful in maintaining a very robust average grade. We believe that very strongly that half a gram is being maintained, because when you look at the assays that we've announced over the past few months, it suggests that a minimum of half a gram, and some areas actually are showing us higher assays as well. And some of the areas are in the upper 0.8, 0.9, even 1 gram in places as well. So we're looking forward to the update on the resource report to provide us with a complete picture on that.
Yeah, and I think like one thing that should be noted, and again, we were just quickly mentioning this off the air before we started, is that a lot of people like since we've talked about it, the stock has drifted somewhat lower, but it should be noted, like we were just seeing this correction consolidation in the precious metals arena. And gold has fallen from north of 2,000, which it hit last year, to just over 1,700 today. So I think it has much more to do with the market, which is not in your guys' control, rather than to what's going on at the company. And I personally believe the gold is kind of bottoming in this area. So I would suspect that at some point you'll see a move back up over 1,900, and that should, combined with the news flow that you're having, especially as you get closer to production, I would think that would help the stock price as well. And I get another factor that it comes into this. For me, I always like share structure to look at it. And if I'm right, how many shares? Sorry, just like elaborate. How many shares do you have outstanding right now?
Currently, we have 85 million shares issued and outstanding, of which the management and the directors collectively own approximately 22%. So well over 20 million shares are held by the insiders in the company.
Yeah, and then this financing isn't really that dilutive. It's only, it's only 2 million. It's only basically 10 million shares. $2 million at 18 cents, 11 million shares.
And that's right. And the management and directors will participate in to the same extent as we always have with the financings. Approximately 20% will be placed with management.
And of course, like this is on my side. Like, I know I have a bunch of accredited investors that are interested in these deals. I will be offering this one. So if you're interested, I should be blasting out the forms and the information shortly. So in terms of the budget for the actual setting up of the production, because you're talking about first quarter next year, what's the actual budget that's been set aside to get the production going?
The budget is actually being finalized by the Denham Engineering, the folks who are producing the PEA. We have our own internal budget, which we are in the process of sharing with Denham Engineering. And that will, our estimate at this point in time has to remain confidential, simply because it has not been produced by a qualified person. Therefore, we have to maintain it as an internal document at this time. But that'll become evident in about 3 months' time once the PEA is completed.
So can I just make a mention here, David, I think is important. Ken mentioned the fact that the insiders have about 22% of the company. We will participate to the same level in this placement. Our cost is around about 19 cents a share. There are no cheap shares for any of the directors. We're totally focused on this company. And the important thing that we see here is the transition from Sonoro over the last 8 months has been significant. Moving to development and near-term production. That is quite unique within the junior mining sector that we're able to do that. The important part about that is making the published information that we will be proposing 15,000 tons a day and a published grade of 0.5 grams and above. And with a recovery, say 72%, which is not unreasonable, as the bottle road did at 80% plus recovery. That would equate to the equivalent of about 50,000 ounces of gold a year in a full production. 50,000 ounces of gold at $1,700 an ounce, or even $1,600 an ounce. There's a significant revenue stream for a company such as Sonoro. So the excitement that we feel about this company is evident by the fact that the insiders, as shown on the insider reports, continue to acquire shares at this level. And also, I think it's an important factor for your investors is that even though many of the junior companies have fallen, we've only traded within a 10% range generally of the shares. So even on the downtime when gold falls or whatever, our shares are very stable and they're liquid. So we are very bullish about the future of the company. And there is this period between now and until we release the new resource report and until we release the PEA that we will be giving up-to-date information. But the real catalyst, I think, for the institutional investors will be on the publication of the PEA, which will show the economics, and the publication of the resource report, which we have no reason to believe will not reflect the very strong economics of the company.
And one thing that should be mentioned as well, Dave, is the cost for production per ounce for some of our peers in Mexico. And it ranges from the La India mine at about $890 per ounce to some of Argonet's projects, which are in the $1,200 range. So we expect to fall somewhere in between as far as cash costs are concerned, all in. So I think there's room for significant upside for the Sonoro shareholders to participate in the spread between the production cost and the price of gold, whether it's a $1,700 or even if it comes down significantly lower. I believe that there's potential for Sonoro to continue to make a significant profit over the coming years.
One point further, David, I think is important. Is when you look at this and your investors look at this, so I know you will do, look at our peers in the surrounding area. They're operating at less than 0.5 of a gram. And so it should not be a consideration of what the grade is, but what is the production level, what is the cost? And that's why you're able to very rapidly calculate the number of ounces that should be produced and at a very profitable level.
Okay, well, I think that's all we really have to talk about here today. Like I said, with these follow-ups, I like to keep them shorter, and we've already, people can always go to the initial interview if they want the kind of more grandiose explanation of what the company's about and yourselves. But yeah, I think the key thing here is that you guys are operating on target, on budget, and really after this financing here, there won't have to be much more dilution. And also, if you want to look at the positive of, kind of a weaker gold market, hitting your stock price a bit, is people now are, if they do participate in the private placement or just buy the stock on the market at 18 cents, they're getting in at a pretty nice level and low valuation. Like, I think your market cap's only about 14, 15 million, which for a near production play is a very cheap entry level.
And I would just add to that, the attractiveness of this offering is that the purchase of the unit at 18 cents includes one share. It also includes a warrant, which is good for 2 years at 30 cents a share. And David, to take it to its final conclusion, which is that if the company moves ahead, as we're planning to do, we see no reason why it wouldn't, and the warrants are all exercised, that would generate another $18 million into the treasury. That being the case, we would end up with approximately 150 million shares outstanding, fully financed. We would not anticipate that we need any further funding beyond that. And so the equation that people have to work on, 150 million shares and a potential revenue from about 50,000 ounces of gold a year.
Yeah. It's just like, for example, I have another deal I'm invested in. I'm not going to mention the name of the company, just because they're focused on you guys, but this is the perfect example. They're at around 30,000 ounces a year. They have 200 million shares outstanding, and their market cap is right now, and I think it's undervalued as well. Their market cap is at about 50 million. Okay, so it's like you guys would have almost double the amount of production and less shares outstanding. So like that just tells you where this stock can go ultimately. Because again, people tend to just look at price of a stock, but of course, one thing that's really important in the juniors is really the market cap compared to the amount of money you're taking out of the ground.
I agree. Yes. So
Okay, well, thanks for joining us. If you have one more thing you'd like to say to kind of wrap it up, feel free.
just a comment I would make, David, is the enthusiasm for this placement was evident by the fact that we had about 55% completed, almost 60% completed within 2 days. And so there's a lot of interest in what we're doing because people recognize that coming into the stock at a price that's a little less than the insider stock with the upside that's offered because of the warrant makes this a very attractive issue.
Oh yeah, I agree. It's because I'll be participating in it as well, and yeah, and just so like I always elaborate on this, like the companies that we kind of consult with, Mike and I, this isn't just like, oh, who can write us a check. We actually handpick the companies because we only do between 10 and 12 of these consulting deals a year. So we're really kind of combing the landscape to see the companies that we like because we're not a fund that's got like an ETF that's got like 100 companies in there just because they just want exposure to the entire sector. We're actually looking for the companies that we think have the quality assets and managements and can outperform.
I think in closing as well, Dave, they want to emphasize that our management team are not new to this game here. Our VP operations in Mexico has built 10 or 11 open pit heap leach mines in northern Mexico over the past 40 years. And our VP exploration, Mel Herdrick, he's got over 5 million ounces of gold discovery to his credit. So here we are right now building up a resource at Cerro Caliche and full expectation that we will multiply the size of the resource so as we continue with the drilling program. And so we fully expect that we will have a very successful outcome here. And we have every intention of going into production in Q1 of 2022.
Okay, perfect. And again, that's not far away now. That's basically less than a year.
It
Okay,
is.
again, so I guess we'll wrap this up now. Thanks for joining us, and we'll talk again in a few months.
Thank you, David. Pleasure talking to you again.
Thank you.
Okay, it is